My next guest runs Hong Kong's first fund specializing in diamonds. It's the Novell Diamond Fund, investing only in the rarest of diamonds, valued at $1 million or more. And Alan Landau is with me now, and you are Chief Executive, of course, of Novell Asset Management. Okay, well, how do you actually, compare like for like when it comes to diamonds?
Well, since the 1950s, the GIA has created a standardized system: cut, color, clarity, and color. So using these kind of 4 C's, you can look at each diamond, grade them, and have a fair confidence of what you're getting is what the GI says you're getting.
All right. Well, we talked in August.
Yep.
How have diamonds, I mean, again, you know, it's a whole plethora of different types of them. Well, generally speaking, because there's no benchmark, I guess, how have diamonds done since I talked to you?
Broad market diamonds have come off a bit since the peak in August of 2011, about 10%, and since October have been trading kind of in a tight range. But when you're talking about really rare diamonds, very expensive diamonds, kind of diamonds that we invest in, and as well as, say, what Graph is really has in their inventory, those kinds of diamonds have done fairly well. And you've seen some exceptional diamonds that have destroyed records set for intense blues and vivid pinks at auction. So for the space that I'm in, diamonds have done very well.
Okay, well, you know, people have been looking at gold as well. But, you know, are diamonds, could they be seen as a sheltering port, you know, as gold is also?
I think, well, especially now that the dollar has really rallied against the euro, and you've seen the effects on gold, which is gold has come off, you know, this year substantially, and from the peak even more substantially, and also just the general volatility that you see in gold. I think a lot of investors are looking at alternatives to alternatives as safe havens, and that really is diamonds. Diamonds really fit the bill because much more stable, far less volatile than gold, because of course it's not quite as liquid, and so therefore there's not as much speculation. So definitely a great safe haven.
But isn't it the case really that the diamond market is artificially kept up by, well, De Beers and its cohorts?
I certainly think a lot of people believe that's the case, but in fact there is a lot more competition in the diamond market than people really believe. Yes, some years ago, 2 decades ago, De Beers controlled 75% of rough production. Today, by value, it's less than 40%. Alrosa, the Russian company, controls about 20% by value. But there's a number of other big players like Rio Tinto and BHP Billiton, some independent mines in Canada and in Africa. So there's actually quite a bit of competition in the diamond market for rough.
Okay, that's the supply, but what about the demand? Is it all now down to the future for India? And does that also, India and China, I should say here as well, and how much of that will really, well, weigh on the Graph IPO coming up as well? Well,
the Graph IPO is really, as much as it's about diamonds, it's about the luxury segment. And luxury items, whether it be diamonds or handbags, you know, they're tied to what the direction of the overall global economy is doing, and as you point out, India and China in particular. So as economies go, as wealth increases, so does interest in luxury goods like diamonds. But you're seeing, in fact, then, because of the growth of the Chinese middle class and the wealthy and ultra-high net worth in China and India and elsewhere, the demand for diamonds has gone up substantially. In fact, the demand for diamonds is far outstripping the growth in supply.
I think you have an interesting statistic, isn't it? I think about 100 years ago, there was virtually no American woman who was wearing a diamond. 50 years ago in Japan, there was virtually no Japanese woman having a diamond, and now the numbers are huge. It's 90% of women have a diamond.
That's right. And so you ask the same question, how many women in China are getting diamonds? Far less, maybe 20 or 30%. In India, far less than that. And we're talking about 2.5 billion consumers for diamonds in the coming years.
Very quickly, Alan, which is the best way to invest in diamonds? I'm sure you're not going to say buy the physical stuff and invest in your fund, I'm sure.
My fund's closed, so if people could invest in my fund, I would say there's no doubt that a pure play diamond investment like mine is a better way to go. Graph is also an interesting way to play diamonds, but again, it's not a pure diamond play. It's really a luxury play in China, I think, more than anything.
Alan, thank you very much indeed for that.
My pleasure.
Now, Alan Landau there from Novell Asset Management.